Oil below $110 as U.S. recession fear strikes at energy rally. Is this the sell-off that the cooler heads inside the oil market have been speaking approximately? Crude costs tumbled some 7% on Friday alone, with the weekly loss even larger, at around 9%. The plunge got here amid sizable worry that the U.S. was headed for a recession from the triple whammy of weakening macroeconomic records, inflation unyielding at 40-year highs, and a Fed determined to interrupt the lower back of that with equally risque fee hikes. Recessions are increasingly more in all likelihood as vital banks race to dramatically boost prices earlier than inflation spirals out of manipulate. Craig Earlham, analyst at online trading platform OANDA, said because the European Central Bank indicated 3 huge charge hikes as nicely for 2022. It is higher than the opportunity, although stagflation. While the world, specifically the U.S., turned into no longer yet in a stagflationary environment, wherein charges saved growing at the same time as the economic system continued falling, the time period has been thrown around way too much in current months, which possibly highlights the trepidation around it, Earlham said. The risk of one is growing. That is why valuable banks are becoming increasingly accepting of their actions tipping the economy into recession, he brought. The last straw for traders in an overly bought oil market on Friday seemed to be a 5th month-to-month drop in U.S. manufacturing facility output, as corporations struggled with supply chain bottlenecks and high fees, despite business manufacturing itself gaining. The Fed's divisional leader for Minneapolis, Neil Kashkari, meanwhile warned that the primary financial institution might need to get greater aggressive with interest charges if U.S. inflation does not retreat from 4-decade highs. That changed into a signal that June's 3/4 percentage point boom, the biggest in 28 years, will be followed up via extra major hikes, regardless of Fed Chair Jerome Powell's assurance earlier this week that there could be no greater supersized hikes this year and that rate cuts may want to surely come as early as 2024. The U.S. economic system has already proven a bad growth of 1.4% for the primary sector. If it does no longer return to the fine by the second quarter, America will technically be in a recession, given that it takes simply 2 directly quarters of negative growth to be in recession. Responding to that fear, New York traded West Texas Intermediate, the benchmark for U.S. crude, settled down $8.03, or 6.8%, at $109.56 in keeping with barrel. For the week, WTI became down almost 9%, for its first weekly loss since April. London traded Brent crude, the worldwide oil benchmark, settled down $6.69, or 5.6%, at $113.12. For the week, Brent tumbled more than 7% for its first weekly drop as nicely in 2 months. WTI surged earlier this week to a 3-month top of $123.18, its maximum since the March run-up to nearly $130 right after Russia's invasion of Ukraine. Brent reached $125.16 after the March peak, which itself turned into the very best in 14 years. While the Ukraine invasion and subsequent Western sanctions on predominant energy exporter Russia had definitely exacerbated the worldwide tightness in crude substances, this 12 months' rally in oil became past the affordability of many terrible, eating countries, say analysts. In the U.S., the exceptional gauge of public burden from the rally turned into the pump rate of fuel, or petrol, that exceeded $5 a gallon for the primary time due to the fact remaining weak. Many pumps within the U.S., in particular the ones in West Coast states like California, had been promoting at close to $6 a gallon, the American Automobile Association said. Diesel changed into even higher in California, at past $7 a gallon. It's nuts, what the bulls had been doing, said John Kilduff, partner at New York strength hedge fund Again Capital. I know we've got a worldwide deficit in oil, however significantly, how a lot more do you want customers to pay, stated Kilduff. there is a restriction to the supply tightness hype. I'm quite positive that we'll be hearing cries of oversold from the alternative side after this, and we could bounce a couple of bucks or extra after the weekend.